Hello, everyone, and thank you for joining me today. My name is Sean Severson, CEO and co-founder of Water Tower Research and head of energy transition and sustainable investing. Thank you for joining us in our Fireside Chat series. Today, we have a great guest and great company, Revolve Renewable Power, and we have Steve Dalton, CEO. And Steve, welcome. Glad to have you today in our Fireside Chat.
Yeah, thanks, Sean. I appreciate you having us on the call today.
Great. And I'm going to run through some questions and, feel free to have a conversation. First one, I guess, to start with, because we have not had you on one of our fireside chats before. I would encourage investors, however, there's a substantial amount of our research, which can be found at www.watertowerresearch.com. I'd encourage you to check there, find out more information on the company. But first time we've spoken in this format. So maybe begin with a little bit about yourself, your background, and brief overview of what Revolve does.
Yeah, sure, no problem, Sean. I mean, in terms of myself, I mean, I've been involved in the renewable energy industry for nearly 20 years now. Would have spent the first half of my career probably on the banking side, so doing quite a lot of project financing of renewables, based out of Europe. And then around 12 years ago, we decided to set up what is now Revolve. And there was a couple of people who set up the company. Myself as a co-founder. Our current president, Omar Bojorquez, also was a founder, as well as a couple of our directors. And we set it up originally to be a kind of greenfield developer of renewable projects down in Mexico. So, in fact, essentially, what that means is we were the team who were going out finding the sites that we thought would make good wind or solar energy projects. And we done that over an 8-year period, thankfully with a bit of success. In that we managed to develop and sell just over 300 megawatts of projects. So that's where we kind of found the projects, brought them all the way through the development phase, if you like, got all the permits, everything in place. And then we sold them on to kind of bigger utilities who then went on to build and operate them. I think in the last couple of years then we've kind of used that kind of platform and experience to really expand the business, and that expansion has taken us in a couple of different directions. It initially took us into the US market in the start of 2021. And then middle of last year, it took us into the Canadian market. So we're trying to create this kind of North American focused renewable independent power producer. That's the kind of strategy that we're in the process of implementing. So as things currently stand, we have just over 3 gigawatts of projects under development across those three countries. We also expanded into the distributed generation market, which is a slightly different part of the business, but still a lot of complementary factors. But effectively, they're smaller projects, if you like, behind the meter, working with industrial companies. And we have a portfolio of operating assets, generating kind of revenue and cash flow, plus we have a development pipeline there as well. So a lot going on in the business, fairly broad remit, a lot of projects under development. I should have added probably along that process of expansion, probably the key thing in terms of this discussion is it led us to becoming a public company as well. So previously we were private. So we're a public company now, 2 years, not quite to the day, but not too far off. So we listed up on the Venture Exchange in March 2022. And that was kind of a core part of the strategy as well, that we're as I said, we're kind of looking to create this public investment vehicle for people looking to get access to the renewable sector, interested in not only the kind of revenue and cash flow aspect, but also interested in the growth aspect, which is the biggest part of our business.
And then along those lines, what makes you unique? I think investors are familiar with some of the larger utility scale solar companies and IPPs, but where do you fit in that bigger landscape in the industry, and what's unique about Revolve Renewable Power?
Yeah, I always find that the word unique an interesting one, Sean. I think if a developer is telling you have anything unique about them, I think you should probably, I won't say quite run a mile, but you should certainly look under the hood. I mean, I think in terms of what we're doing, in terms of our core skill set, it's project development and project management. Like, there's nothing necessarily unique in that. I think the probably strengths that we have, which is where I always focus investors on, is the team that we've put together. Like, we've been obviously working together for a long time, hugely experienced in the sector, We know these markets, we know these projects. We have a long track record of delivery, which I think is really the key thing for investors. We can actually point to projects we've developed, shareholder returns we've made, and that goes from when we initially started in Mexico as a completely brand new company back in 2012 to even into the US market in 2021, where we went in, no portfolio, very quickly we established, I think it was close to 2 gigawatts of project development assets. We might touch on it later on, but we exited out of a large portion of that within an 18-month period. So I think we have a hugely experienced team, track record to back it up, even since we've gone public and we've kind of moved to this more of a, IPP operator model. We've been out there in the market doing M&A transactions, delivering projects for shareholders, and really building up the company kind of step by step.
So along those lines, I think to explain to investors what it means to be an owner, an operator, and a developer, and you've stated one of your strategic initiatives moving towards the owner operator, long-term cash flows, but I think it'd be very helpful if you could define some of that for investors who are new to this sector.
Yeah, sure. I mean, I always kind of describe it. It's very like property development, if you like. Kind of renewables is no different. You're just dealing with energy generation rather than a property. But in terms of development, that's where, like I said, we're going out and finding a site, and that could be a piece of land located close to a substation or in an area that has a good wind resource, and we're putting together a sketch of what we think a project would look like in that area. And then over a kind of 3 or 4 year period, we're, getting the permitting in place, we're securing interconnection. In some cases, we're agreeing commercial agreements to sell the energy. And we're really creating a package, to put that project in a position where it can actually start construction, And at that point, we kind of have a decision to make as a company. Do you take development value off the table? And what that looks like is, and I think we have this laid out in our presentation, it's kind of 40 to 50,000 megawatt is a kind of a benchmark of where you see transactions being done. And the investment from our side is, these are rough numbers, but call it a $2 million investment over that 3 or 4 year period. So if you take a 100 megawatt project, you can make $5-6 million from it, and you're putting in maybe 2 million with a lot of that back ended. Obviously, the bigger the project, the bigger return and the bigger multiple you can get on that same investment. And that's the development model, and it worked very well for us. We've used that for essentially the first 8-9 years of the company. Like I said earlier, we sold a number of projects and generated some good returns for our shareholders using that development model. I guess the downside of it from a public company perspective is if you look at trying to communicate kind of long-term cash flows and revenues for investors, the revenues that come off development, while they can be quite large, they're fairly lumpy, so you might get a large payment this year, but you may not get it next year, and that's the kind of challenge in a public kind of markets forum. So as we kind of look at an operator model, it's the same project, but really what you're saying there is you're holding that asset for the long term. So you're actually going to go and construct the project and own and operate it for the long term and actually generate that long-term recurring revenue, where if you ask me, okay, Steve, what are you going to make off this project? I can actually lay out a financial forecast for the next 20 years as to what that project could look like from a revenue and cash flow perspective. And the returns you get from those types of projects, it depends on the jurisdiction. And it also depends if you're acquiring projects or if you're actually developing them yourselves. But, you can get mid-teen, maybe higher in some market kind of returns over a long-term basis. So really it's about just the business model, Sean, and where you're looking to extract value from the project.
And starting from the developer all the way through to the owner operator, you're going to get those. I assume the project gets de-risked, right, through the development process and then to the owner operator, right? But if you capture the entire economics from the developer through to the owner operator, you get a boosted higher return, right, than if you were just buying assets on an owner operator basis. But it does provide those long, predictable cash flows, which we all know Wall Street investors love, the predictability of the cash flows. But you do catch that extra push that you get from the development model, right? So if you look at the overall returns, it's, like you said, it's a pretty attractive model.
Yeah, I know, absolutely. So, like, I mean, and again, I won't name company names, but if you look at why people would buy utilities or the larger renewable focused companies. They might want a dividend yield, and that dividend yield might be 4%, might be 5%. A company like us, by owning the asset right from inception all the way through, we can generate much higher returns, which, obviously as we continue to grow the company, you'd like to think we can pass that back in some way, shape or form to our investors. But at this point, we're obviously in a fairly high growth phase. So a lot of the capital we're generating goes back into new projects to get that scale as to where we're going to go. And where we currently sit in terms of the two business models, we're kind of doing a bit of everything. The ambition is certainly to move more to that renewable IPP, but like I think it was probably 18 months, not quite 18 months ago, we sold some large assets to Engie, which you might say, well, Steve, that goes against the model, but they were kind of very large projects, which we would probably not build ourselves, but we're able to extract value from those and then do acquisitions like Wind River or build some of our own smaller projects. So at the moment we're in this kind of transition where you're still able to lean into your development skill set, get a return for shareholders from selling some of the larger projects, recycle that capital back into building smaller ones, which you can then own and operate for the long term. So you'll see in our revenues, since we started to shift to this model, I think for the full year to June 2023 was 1 million already. For the 6 months, we're ahead of that already. We're still forecasting 5 million revenue and EBITDA break even to June this year. That's still the forecast which we issued last year. So investors can see quarter on quarter how we're kind of building up that revenue stream.
Well, it's a great lead into my next question, which is about Wind River. I think is a great example. So let's spend some time on that. It was a significant milestone for you in the company. So it'd be very helpful if you could walk us and investors through that transaction.
Yeah, sure. And I guess the transactions like this really are the other part of our strategy where, there's two ways we can develop the business. We can use our own portfolio to generate those projects, which we then try to construct and operate, or else we can also try to fast track that by acquiring some businesses and some existing projects. So we've done 2 transactions in the last 18 months. The first one was the acquisition of an operating portfolio of rooftop solar from Centrica in August 2022. And we were then on the lookout for other potential transactions, particularly in the US and Canada. And Canada was a big focus for us to kind of round out that North American strategy. So Wind River, I think we came across that opportunity probably the start of last year. So worked on it quite a lot through the course of the last 12 months. Managed to complete the transaction just there in February. And essentially what we bought is a portfolio of interests in 2 operating hydro projects in British Columbia, and then a majority share in an operating wind project in Alberta, plus 2 development hydro projects in BC as well. And probably, I'd say most importantly, but another really key important part of that transaction was the team that came across. We brought across a really highly experienced team in Wind River who've been operating a number of these hydro projects for a long period of time. So, it was a great transaction for us. We were delighted to get it done. They do take a bit of time, but it's ticked all the boxes, and some of the things we've been discussing on this call in terms of the projects themselves have long-term PPAs. I think on the wind project, it's 10 years plus. The 2 hydro projects are 30 years plus, so it's long-term recurring cash flow with, very strong counterparties. We have the team that came across with it, plus we got some development assets. And then, like I said, we've rounded out that North American strategy. So now we can say we have assets in Canada, the US and Mexico.
And can you just give us an idea of the economics? I think, as investors and look through this, we all try to build models, right? And understand what the flow through is and the economics are for the common equity shareholder. So if you could just walk through, it doesn't have to be a specific project, just an example of how the economics work for you and what that translates into for the shareholders.
Yeah, I mean, I won't go into the specifics of the particular deal, but it goes back to some of the things we spoke about in terms of that value, the valuation or the value cycle, if you like, whether it be in development or on the kind of operating side of things. So we're able to pick up assets which are let's say double-digit returns on a cash basis, plus with some interesting development assets in it. And they add that recurring revenue and recurring cash flow to our P&L and our balance sheet. So the kind of economics are fairly straightforward, Sean, from that perspective. I mean, you're effectively buying a cash yield. Like operating projects in general, particularly renewables, they're fairly straightforward to understand. Like you have an energy resource, be it hydro, be it wind. You have a reasonably low level of operating costs, maintenance costs in the grand scheme of things. And they're generally financed by debt, either project financing in this case, and then the excess cash flow flows through to companies, the shareholders, which in this case include ourselves. So they're kind of attractive assets. And I think as well, you have to look at Wind River in the context of everything that we're doing. So we have those assets that we've developed ourselves. We're doing some of the M&A stuff, which are still good returning assets, but you put the whole lot together as a portfolio, and to us, it's a really interesting strategy. It should be fairly compelling for shareholders in terms of the returns you can get from these projects versus the alternatives of where you can potentially put your money, which is like the larger companies, but with a dividend yield and maybe not as much growth.
I think that's one of the really interesting, unique things about the investment opportunity here is for public equity shareholders to be able to participate in projects, share in the economics at this level, because usually that's exclusive for, a private equity fund or large equity investor, some cases not necessarily the debt investors, but to get to this ability to invest at the project level through participation in Revolve, right? I mean, that's unique, especially relative to the big IPPs, and where you're talking about, yield plays and mid-single digits at best, right? This is an opportunity for public equity investors in the small cap world to participate.
Yeah, absolutely. That's we kind of really try to emphasize in that we recognize like you definitely need to be generating revenue, generating cash flow, providing that kind of underpinning, if you like, of the company. So, it's not all just about development with no revenue. But we're offering investors the upside from development and kind of, coming on, let's say, the journey with us, if you like, of growing our portfolio, converting that into these assets, which are going to be generating long-term revenue and cash, and building this company up to be a kind of mid-size, renewable IPP, like I said, focused on the North American market. And I don't think there's too many kind of opportunities to participate that at a public level, unless you want to go into some of the much larger IPP opportunities, which, like we said, maybe you don't get the leverage on the growth side of the story, and it's more about a dividend yield.
And you guys have set out some financial targets, right? Some objectives going forward. Could you just go back to those, tell us a little bit about them, and also what gives you the confidence as a CEO and in the business to, be able to have that visibility, at least as a target anyway, for where you want to be?
Yeah, sure. I mean, we had a good debate internally about this last summer. Like, should we kind of issue forecasts? Is the right thing to do? Obviously, you need to be able to support them and obviously go through that process internally. I think, again, if you look at what we've been doing across the company, we've done those couple of acquisitions that I mentioned. We've done that large deal with Engie last year, which, we've already received $3 million from. There's further milestone payments due in the first half of this year, so the next couple of months. And we've tried to give investors some indication of the potential value, which is, a considerable amount more than our current market cap. So, if you start to look at those different components in terms of the deal that we've done to sell some assets to Engie, the acquisitions that we've done and how that's kind of built up revenue and cash flow quarter on quarter, and the acquisition particularly of kind of Wind River. Plus, the third component is the projects that we have in construction and we've developed ourselves. So we've obviously built a project ourselves down in Mexico. We have 3.5 megawatts currently under construction, which we hope will hopefully be revenue generating this year as well. So that gives us certainly, and it gave us enough confidence in terms of putting out the forecast to June this year, which was the 5 million revenue and EBITDA break even. I think when you look beyond that in terms of the 2025 target, it was certainly more of a target rather than a forecast, and I draw the distinction between the two. Our 2024 was a forecast. We actually looked hard at those numbers and said, we think we can achieve this. The 2025 one is more of a target which we're hoping to build into. But, we're seeing enough momentum behind the business in terms of the deals that we've done, the assets we have under construction, the other opportunities we see out there in the market that we think we can bridge across to that. A lot of it comes down to capital as well. So that's the thing that shouldn't be lost on investors. You need to utilize your capital as best you can to get these projects built. But certainly we're seeing enough opportunities. That's the big key thing, Sean. We've no shortage of projects being generated from our own team, or no shortage of opportunities that we see in the market to do similar deals like Wind River, to help us kind of bridge across to that target. And that has to be where we were aiming for. We need to get to that if we want to get to that mid cap kind of level, we need to be looking at minimum of targets of that level and more. We need to be continuing to grow at a pretty rapid clip.
And then that's great to bring me to my last question, which is about capital and financing structure. Because I think investors, when they look at businesses, trying to understand the capital needs, and you take capital, you deploy, return on it, and you're in a long-term cash flow on it. So how does financing, from your view, fit in strategically? Where are you today? What do you expect that to be going forward? Because it is a question, one of the first questions we always get from investors.
Yeah, sure. I mean, I get those questions myself as well. I mean, there's only so much you can say as well around it, Sean. But again, not to probably go back on some of the points, but if you look at what we've done, I mean, if you look at what we've done historically, I mean, we raised, I think, three odd million of capital when we started. We then developed some assets, sold them, and really didn't have to raise capital again until we actually went public. And if you look at what we've done since we've gone public, we've sold some assets to NG that's generated 3 million of cash that we've got in. That's helped fund the business. We obviously just completed a small private placement of just over 2 million in the last couple of months. We have cash flow coming off assets as well. So, we have different sources of potential capital and cash flow that are coming into the business, thankfully, at the moment. It's always a balance for us around what project opportunities you see versus the capital you have available to us. But I think the big key thing for us, our milestone would be hitting that break-even level, which we're forecasting to do to June this year. There's obviously a component of that will be getting the next milestone payment in from that NG deal, which I think we've communicated to the market. So that is a component of it. But if we manage to hit that forecast, then effectively you're break even, and then really the capital bit becomes more about the opportunities we see in front of us and what we choose to do as a business. There's other things we can also look at. I think we've outlined in the shareholder presentation that the Mexican market is now looking very interesting again. I think it was probably in the doldrums for a couple of years, but in the last really 6 months, if you look at a lot of the news coming out from Mexico on the renewable energy side, all very positive. Actually, just I think it was just yesterday or maybe the day before, there's presidential elections in Mexico this year. One of the candidates who's running started to talk about potentially trying to bring back auctions again for renewable energy, which is the first time that's been mentioned in 3 or 4 years. So Mexico's looking super interesting, and you may see us try to do something down in that market if the conditions do improve, which is what we're seeing on the ground. So we have a number of different options, Sean, on the capital side, I guess, is the net point I'd make.
And I think it's important for investors to understand too that you've been delivering on the targets, right, and the objectives, hitting the milestones, getting to break even. All of these things lead to a lower cost of capital. All right, that's really what this comes down to. But and be it debt, equity, whatever function you're using, the cost of capital for the company starts to go down. Which it's important for shareholders to remember that as your cost of capital goes down, the returns you're getting on your projects do not, right? So the arbitrage here gets greater and greater, which is better returns for shareholders. So it's critically important investors understand the progress here as it leads to lower cost of capital, which generates overall bigger returns for Revolve and its shareholders, right?
Yeah, exactly. And I mean, I think is the thing to remember as well is that, we don't necessarily need to double our team or double our overhead to get to where we need to on the revenue side. So there will be a point at that break even where actually you're starting to generate free cash for your business. now at the moment, like I said, we're in a high growth mode, so we will reinvest that, try to get more products on, try to continue the revenue side of things. But at a point in time, obviously our target would try to be that you can look at different ways to utilize that cash, but it's gonna take a bit of time.
Well, great, Steve. This has been very helpful. I'd like to remind investors that you can find all of our research on Revolve either on the research aggregators, Bloomberg, FactSet, Refinitiv, CapIQ, etc., or on our website, www.watertowerresearch.com. All of that is open access research, so feel free to listen to the Fireside chat. This is available on demand. So if you have somebody you'd like to have listen to this and watch it, please forward them the original link in the invitation, and they'll be able to access this on demand, and again, as well as any of the research on the website or aggregators. So with that, Steve, I'll turn it over to you to any final remarks you have, and then I'll close this out.
Yeah, no specific ones, Sean. I mean, I think from a public investor's perspective, I mean, one of the other things maybe we didn't talk about was that news flow aspect and the activity in the company, and I think that's one of the things we always like to focus on, and that we're a very active company, a lot of projects in the portfolio, both doing our own development, like I mentioned, plus this M&A. So you're going to be hearing a lot from us over the coming months and quarters, which I think is pretty important for investors.
Great, thanks. And just as a reminder to everyone, the views expressed in this Fireside chat may not necessarily reflect the views of Water Tower Research and are provided for informational purposes only. This Fireside chat may not be distributed or reproduced without the written consent of Water Tower Research and should not be considered research or recommendation. WTR is an investor relations firm, not a licensed broker, dealer, market maker, investment bank, underwriter, or investment advisor. Additional disclaimers can be found at our website at www.watertowerresearch.com. Thank you, everyone, for joining us today. Thank you, Steve, and we look forward to having you back.
Yeah, appreciate it, Sean. Thanks for your time.